Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney. As always, I'm excited to be here with you today. Today I'm going to answer the question of, should I select a graded premium policy for my private specialty disability coverage? I work with thousands of physicians across the country, helping them with their individual and private specialty on occupation disability coverage. I broker the top carriers. None of the carriers pay my overhead or rent, so I'm independent. There is one company, there actually are two companies that offer what's called a graded premium when you pay for your disability policy. You would want your disability policy, your private policy, to be what's called non-cancelable and guaranteed renewable, which means that the insurance company can never cancel the policy. You can cancel at any time, but they cannot. They can never change the definitions, and they can never increase the rate. Okay. The top four carriers offer this, and I broker all four. That's what our clients' policies are: non-cancelable and guaranteed renewable. However, a couple of the carriers offer the ability to still have a non-cancelable and guaranteed renewable policy, but the premium starts off cheaper and gradually increases over time. There's an annual increase to your premium. So let's say that the fixed premium, which is what people are generally wanting when they buy their private policy, is to pay a premium and that premium to never go up unless they increase coverage, of course. But if you start at $5,000 a month and you're paying $150 a month for that premium, for that coverage, if you keep it to age 65, you're still paying $150 a month. That's what you should get. Okay. There are a couple of companies that will say, hey, if $150 a month is too much for you while you're in training, you can start off at $80 a month. Okay. And you're not paying, it's the same benefit, the same definition of disability, the same enhanced partial or residual benefit, the same recovery benefit, the same benefit increase or benefit purchase rider or future increase option. It's just that the premium starts at $80 a month instead of $150. And that sounds great, right? The issue is that, or at least something you need to be aware of, is that it's not going to stay at $80 a month. Next year it's going to be $85 a month or $83 a month. And then the next year it's going to be $90 a month. The next year it's going to be $95 a month. I'm just using round numbers, but it's going to increase every single year. Okay. So the purpose in doing that would be to allow you to get coverage that's otherwise cost prohibitive at an introductory rate that is easier on your budget. The downside to that is that it does increase over time. And then there's a place, or at any point during that graded premium life of that policy, you can convert or switch to what's called a level premium. Okay. The level premium that you switch to will be based on the age you are when you do the switch. Okay. So that if you're 30 years old and your premium is $150 a month, if it's fixed, okay, you pay that $150 a month for the next 35 years for that $5,000. Okay. If you started with a graded premium, let's say it's $80 a month, it's going to start increasing every year. And then when you're 35, you convert to a level premium. It won't be the $150 per month. It's going to be $170 per month. It's going to be based on you being age 35 instead of age 30. It might be more than $170. I'm just using an example here, kind of general numbers, round numbers, to give you an idea. Okay. So to answer the question, should you do this? Well, it's an individual decision. The question is that policy worth paying less for initially to get your foot in the door and to get the coverage, knowing that you're going to pay a higher rate than you otherwise would have paid for a much longer period? So if you do the math, you would much rather pay $150 a month in this example I used for the next 35 years than start lower at $80 a month, have an increasing premium, and then switch over to a higher rate, let's say $170 or $175 per month for the next 32 years or 30 years. You would come out ahead if you started with the level premium, is the bottom line. Okay. So mathematically, you would rather start with a level premium than start with a graded premium. The issue I have is that I routinely talk with physician client or people that are coming to me to help them with their coverage, and they have a graded premium and they didn't know it increased. They didn't know it was graded. They just thought it was cheaper. They said, okay, yes, 80 a month. I'd rather pay 80 a month than 150. I'll go with this guy or gal because it's cheaper. They got me a better deal. Well, it's really not a better deal. It's just an entry level that lets you get started at a lower rate, but you're going to pay. There's no free lunch in the insurance world. Okay, that's the key to remember. There is no free lunch. If you pay less now, you will pay more later. Okay, so from a long-term planning perspective, it's better to get the level premium, and then that's the most cost-efficient way over the long term. So if there's one carrier that is more expensive but offers a graded premium, and then there's another top-tier specialty carrier that's less expensive with a level premium, then most of our clients are going to tend to gravitate to that lower premium with the other carrier than try to figure out a way to pay for a more expensive policy, because there's no reason to overpay for this coverage if you're getting a top-tier contract. There are 4 top-tier specialty carriers. It is totally okay to pick the cheapest one, the one that has the largest discount for your situation. Just know that you need to confirm whether or not you're getting a level premium or whether or not it's graded. The exception to that, where the graded premium can make sense, is if you have an availability or need for what's called a guaranteed standard issue policy, and the carrier that's offering that gives you the opportunity to get a graded premium, and you otherwise could not afford that guaranteed issue policy premium if you paid the full fixed rate from the beginning. Okay, so if you have a health history and you want to be able to get a policy that doesn't ask any medical questions, or if that's the option that's available to you and it makes sense for you to get it, you want to consider that, then perhaps a graded premium makes sense as a way, again, to get the coverage while you're still in training and let it fit within your budget. But it is an individual decision. You just want to understand the math and make sure that you know what you're getting. You will ultimately pay more for that policy versus having started at the level premium to begin with, typically, if you keep it for your career. Some people will think about a graded premium because they don't think they're going to need their disability insurance as long because they're going to be financially independent and they won't need coverage. That's a kind of a short-sighted, kind of backing yourself into a corner where you're going to want to probably drop that policy if you start with a graded and never switch it over to a level premium, because it's going to get pretty expensive as you get older. Most of our clients, even the ones that are financially independent, end up keeping their insurance because the quickest way to become not financially independent is to self-insure a disability claim. Okay, you want to run out of money quick, you start tapping into investment accounts and paying taxes and fees and all those kind of things because you need cash on hand to pay your mortgage. It is advisable for someone who has the benefit of being wealthy because they've made strong investment decisions and just their situation allows them to keep their private disability insurance because it's pennies on the dollar. If you become disabled, you clobber the insurance company financially, and the money that you save on the premium and investing in other things like real estate is nominal at best. It's just not going to move the needle probably in a way to greatly enhance your net worth. And so wealthy people pay for insurance because paying 10 cents on the dollar is always wiser than paying $1 for $1 or $1.50 for $1 if you have to get it at a time when you're paying a lot of taxes and fees. So again, your decision, food for thought. Graded premium is there if it's necessary. It's buyer beware. Just know what you're getting. I would be happy to discuss your situation in more detail and discuss the numbers specifically for you if you wanted to. Feel free to text me at 704-270-2376 and we'd be happy to arrange a conversation. Again, 704-270-2376. Again, this is Billy Gwaltney. Thank you for your time. Grateful for that as always.
Thanks for listening to the Cover Your Assets podcast, an Odd Conduit media production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.